Good morning, good afternoon, good day. Welcome to my weekend market roundup, 19th June 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They are the add-ons for the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system, starting with a look at the global market. Starting with Australian index AXJO. AXJO, my view is same as was in the previous week. It is bullish in the weekly, in an uptrend in the daily, too close to the upper boundary to take a new long trend. Topics: Japan market. Price came down in the weekly chart, but the backdrop color is still bullish. In the daily, the first trend line is broken. It is still in an uptrend. But we have a bearish color candle on Friday. We are not going to take any new long trade. We are not going to short as well. China market index CSI 300. That old weekly trend line support is still holding. The daily supports are still holding. If price can bounce up from the daily support, we may look for a bounce long trade in individual stocks. Let's look at Hong Kong market also this time. Hang Seng index. Sideways in the weekly. Backdrop color is bullish. Shape is also bullish in weekly. Daily, Friday's color is bullish. Bullish flow. Moving sideways, no bearishness. UK market FTSE index. Here the weekly backdrop is bearish. We also have a reversal candle and a bear release signal. We are not going to take any long trade because of that. At the same time, daily is right at the trend line support. We are not going to take any short trade either. And India's Nifty 50 index used to be the strongest of the global markets, and that is continuing. This week's candle shape is indecisive. Color is bullish. On Friday, price tried to go down but ended with a very long lower tail candle that is bullish. Traffic light color is bearish red. That's why we are not going to buy now. Also, it is too close to the upper boundary to buy now. The positions that were taken earlier, probably at these points using bullish flow in the index, partial position in them may still be held. The global markets are still continuing to be bullish. None of them are in a downtrend. Some more bullish than others, but none of them are bearish. Let's now look at the USA market, starting with the ETF SPY. I tweeted several times during the week to see whether these trend line supports are broken in daily. Tried that on Wednesday, tried that on Thursday, but failed. On Friday, it gapped down at the open and continued to go down. The two daily trendline supports are decisively broken, and the weekly trendline support is also decisively broken. Remember, until the last webinar, though price was gradually going up, I showed that the weekly backdrop color was remaining bearish, and that was one reason for me not to take new long position in SPY. That caution was useful because the magenta color remained, and now we have a bearish shape and a breakdown below trendline support. In the daily, it is some distance away from recent high. If we are looking for a short trade, we will not put stop above the recent high because there is a gap down open on Friday. If we take a short trade, we may put stop just above the high of Friday's candle. Or you could see if price goes to the trend line support, extended trend line support, and reverses from there. That may give even lower risk shorting opportunity than trying to short right now if price goes down. Am I going to short many stocks now? As of Friday, I closed many of my short positions with profit. Some of the short trades I shared publicly, some I had taken myself. I booked profit in lot of them, and in fact I bought some stock on Friday. Why, I'll explain later. Explain later more, but let's look at SPY also. SPY gap down at the open. It is right on top of the yellow direction line. The weekly is certainly looking pretty bearish. Daily is at the yellow direction line. Came down with bearish pressure. If you look at volume, we have gradually increasing bearish volume. 3 high volume days in a row, all bearish. When did it happen last time? I looked back, it happened here. 3 red bars in a row, gradually increasing volume. When it happened the last time, it didn't drop below that, and yellow direction line was right below price at that time also. And in the previous occurrence, it tried to go below the yellow direction line and recovered. Couldn't breach the yellow direction line. That is one reason when I observed that my short positions were mostly using options, they were mostly in profit, probably all were in profit, some in very good profit. I didn't want to erode those profits. I closed many of my bearish positions that were using put options. I will explain few other reasons why I decided to book profit in some of my trades, bearish trades. Let's look at QQQ. This is now the strongest of the market ETFs. Could not break the trend line support in daily. Weekly is near the watermark resistance, just below that, which was the previous all-time high. Weekly shape is indecisive, not bearish like SPY. Color is bullish, not bearish like SPY. Of course, daily has displayed a bearish headwind signal. That is a cautionary signal. We'll see if it can break below the trend line support, And even if the immediate trend line is broken, there are multiple other trend lines nearby. SPY has broken through all of those, but QQQ will now need considerable effort to break through all of them. Because QQQ is near trendline support, that was another reason I decided to book my profit in bearish trades. Let's look at IWM now. IWM came down. Daily color is bearish, weekly is bearish. Weekly reversed from the watermark resistance with bear release signal. However, weekly stopped right at the trendline support. That was yet another reason why I decided to book my profit in several bearish put options. And lastly, Daya. Daya is also bearish like SPY, broke below all the trend line supports in daily, bearish shape, bearish color in weekly, reversal signal in weekly. It's looking very bearish. And if you followed my web, I'm sorry, this is D, not Daya. Let me come back to Daya. This is Daya. Dow Jones Industrial Average ETF decisively broke below weekly support. Daily trend lines were broken long time ago. Now it broke below the watermark support as well. If you are following my webinars regularly, you know I shorted Daya right on this day using fine tune or precision entry 5-minute interval chart using the daily trend line resistance and breaking of pivot line in intraday 5-minute chart. I booked partial profit on that day itself, and the remaining position I was holding all along. If you look on Friday's candle, it's very bearish. Weekly is also bearish. There is no reason to exit the remaining position except what I shared in the other market ETFs. And also I looked at Daya also. 3 increasing volume bearish days. When did it happen last? Here. When did it happen before that? Here. On both of those occurrences, price did not continue lower. Of course, if you look at Friday's candle, weekly candles, both are very bearish. However, based on the past occurrences and the supports in QQQ, IWM weekly support, SPY yellow direction line possible support, I booked profit in Daya also. I had an extremely narrow risk in the trade, maybe something like that. And on the remaining position, I had a very high reward risk ratio. I'm happy to book the profit. It is already extended from the recent high, oversold. I will look to short it again if it tries to go up and comes down again. That will be a go with flow trend following short setup if that comes. But I have booked my profit position, booked my profit in remaining Daya position also. One more reason why I exited many of my bearish positions was in QH, in the bucket analysis. The percentage of stocks in the lowest bucket, extreme low bucket, that is now at above 40%, almost 41%. And in one day, yesterday, it jumped from about 8 to 41. That's a huge jump in one day. Since the time Q traders, including myself, we are tracking the bucket analysis, bar chart and pie charts. This is probably the most bearish extreme we have seen so far since the time we started checking this on QH. At 40% in the lowest extreme bucket, that is 40% of S&P 1500 stocks are below lower Bollinger Band, and it jumped from 8% to 40 or 41% in one day. A retracement is likely, not guaranteed but likely, and that was another reason why I decided to book my profit in put options. Put options profit can erode very fast. Naked call options profit can also erode very fast if the stock moves against us. I didn't want to risk that. I had good profit and I booked profit. Of course, Friday was very bearish overall. If we look at QH, 100% of sectors, 98% of industries, 91% of stocks were down. In fact, if you watched my previous few webinars, though others were gradually getting bullish, many traders, I explained in last and also the previous webinar that though 1 day, 2 day periods were becoming bullish, bearish, it looked like the red color was propagating from the left side to the right side, and that anticipation based on past observation became even more true now. The red colors have propagated to the right across the sectors, industry, stocks. Now if we look at the 1 month to 1 day sector, industry, stock advance decline, it is decidedly bearish, and it is the most bearish it has been in a very long time. If you followed me on my forum or watched my videos, you know I started taking bearish trades and I shared them before knowing the result when I took them publicly, well ahead of others being bearish. And now everybody is starting to say market is looking weak, and it is indeed looking weak. And as you can see, I have booked profit in many of my short trades. I even bought some long positions. What does it mean? It means using the Q comprehensive analysis or visual signals, I, like many of you, are able to be ahead of others, sometimes by a week, sometimes by a few days, and that being ahead of others but with accuracy at the same time matters a lot in short-term trading. And so far, I could pick the top once again, I think before most other traders. This picture is looking very bearish because it is looking more bearish than it has been in a very long time. Maybe it is due for a pullback. When everybody starts noticing that market is bearish, it may not go down, but it may go down also, but that's okay. I am having some short positions. Those are in relatively weak stocks. I'm having some long positions. They are in relatively pretty strong stocks. I will continue to, I hope, add to my profit. Let's look at Finder now. And it is not only bearish, again like in QH, it is the most bearish it has been in recent days, weeks, maybe months. 92% of all weekly signals are bearish, 87% strength signals bearish, 93% of trend continuation signals are bearish, 94% of reversal signals are bearish. Across all categories, about 90% or more signals are bearish. Number of bearish headwinds is also more than previous week. And this is what I mentioned in the previous webinar also as a reason to be cautious. The weekly bearish headwinds were not negligible. And now, of course, the trend following, breakout, reversal, headwind box across all categories. Pressure everywhere, almost everywhere you see many more bearish signals than bullish signals. Now it is obvious to everybody, but I could take bearish trades earlier. Weekly finder is bearish and daily finder equally bearish. No need to go more detail into that. The pie charts being in full red color, predominantly red color, shows it is bearish. What about market internals? Is there any Hindenburg? Is there any distribution count? Yes, there is. No Hindenburg at the right edge, but there is a distribution count of 2. So far there was no distribution count, and no major market drop has happened without a distribution count of 2 or more. Now we have a distribution count of 2 on Friday, not before that. And remember, until Thursday, SPY trendline support was holding, but Friday it broke, and Friday we have 2 distribution counts. They are from which markets? One is from Dow Jones, another is from S&P 1500. They had distribution counts in Q systems. Now there is a possibility that market may drop sharply and suddenly, maybe, but I will be happy to short if it retraces a bit and then comes down again. So I will have proper stop position in individual stocks. If we look at individual stocks, many of them may not be giving low risk short opportunity now. They have already dropped for a few days from recent high, just like SPY has done. Let's look at the other aspects of this market breadth total view. Lot of useful insights. The yellow line, percentage of stocks above 50 MA, that has sharply come down. Now people may be noticing, but remember, when price could not go above the average line, that time itself in public webinar I mentioned that though SPY was going up, QQQ was going up, they made new all-time highs. The failure of the yellow line to go above the average line was showing that under the hood market was not so strong. That caution read from market breadth total view was useful. The yellow line has dropped below 50% level. It's below 40% level as well. The exact reading on Friday is 36.9%. 36.9. So only 36.9% of stocks are above 50-day moving average. And this is a complex calculation, somewhat complex because it considers the stocks in 2 major composites, Nasdaq NYSE, and 4 major indices, S&P 1500, 500, Nasdaq 100, Dow Jones Industrials, everything combined into a single chart. The yellow line is clearly showing weakness. Far below 80% level, below 50% level, below 40% as well. The white line, percentage of stocks above 200 MA, is slower than the yellow line that has come down from the 80% level, but it is still hovering at a high point around 75%. And percentage of stocks at 50 MA above 200 MA, that is even slower, that is also hovering close to the 80%. As I mentioned earlier also, for short-term trading we will rely more on the weekly, more on the yellow line, and we could anticipate the weakness earlier, which came true, and it is looking quite weak now. The 3-month new high low came near the extreme level, pulled back below the 50 or midline. We'll see if it can go to the lowest extreme. If it can go to the low extreme and turns up from there, I'll be happy to start buying more stocks from that point. It still has some distance to go before it reaches the lower extreme, the 3-month new high low. This picture is looking bearish and we have a distribution count finally. So we have to be more cautious now, those who are following this technique. What about mega caps? Let's look at mega cap top 20. Mega caps are doing very well. Look at the relative performance line. Relative to the market, it is doing very well. The slope is becoming more steep, becoming more strong than the market. It is near the upper boundary, therefore if we could buy mega cap top 20, Q traders would still not buy it at the time. At the same time, no question of shorting because there are many trend line supports nearby. This is looking like QQQ, and QQQ indeed is very strong. It's looking just like mega cap top 20. Now imagine what will happen if the mega caps start to come down without the mega cap coming down, which is influencing QQQ Nasdaq 100. The market is looking so weak. When we look at Q edge, sector industry stock breadth, when we look at distribution counts, when we look at find the technical breadth, everything is looking so bearish without the mega caps coming down. If the mega caps start to come down, the damage may be much more. So with that hypothesis, I did look at the mega cap tech stocks and see if I could short any one of them in advance. Of course, I would short only if the risk was very narrow. Let's look at the mega caps. Tesla, and I am now using Q Elite on trade station. Bullish color in daily. Broke above the trend line resistance. Has an upper tail, but it is still green. Broke above the resistance. I am not able to short it. Netflix, green in daily, broke above the trend line resistance. Looking similar to Tesla, I am not able to short it. Amazon, green in daily, green in weekly, not able to short it. Microsoft, weekly is green. Daily is yellow, but there is no obvious resistance nearby that I could use to short it. Also weekly is green. Google has clear support near price, not able to short it. Facebook. Facebook actually, I already had a short position in Facebook. Facebook is looking weak. I had a short position already, so I didn't want to add to that on Friday. In fact, I booked partial profit in Facebook also because I booked profit in many of my put options in Facebook. I had a put vertical, not a naked put option, but still I booked some profit in Facebook. So I was not going to short Facebook again. And how could I short Facebook earlier? In fact, I discussed it in previous videos or Twitter somewhere. Facebook used to be the strongest, one of the strongest. Google was also very strong. And I explained in the previous webinars that it was starting to display bearish headwinds, not able to go up. Daily had indecision at the top. When I discussed that, I did take a put vertical short position in Facebook. Last one that we have to see is Apple. And here I have trendline resistance near price in daily as well as weekly. The weekly color is cyan, that's okay. It came near the resistance in both daily weekly, displayed a bear release on Friday and an indecision at the top on Friday. Using the trendline resistance, just like I did earlier with Daya, I took a bearish position in Apple. I looked at all the mega caps. Mega caps are still holding very well, and I thought if they come down, which one could I short? And I identified Apple. Facebook is also weak, but I already took a short position in Facebook earlier. So I took a short position in Apple on Friday. I took put vertical, so my risk is very small. We'll see if the mega caps continue to hold their strength. If so, market may recover. And that is also one more reason why I booked profit in several bearish put options. Which ones I booked profit in? Let's look at some of them. L Brands. L Brands was one of the stocks that was a high flyer. And let's look at its fundamentals. I think fundamentals were good. I mentioned earlier I am willing to ignore one dimension only of the Q360 degrees analysis. Even if it is not aligned with my trade, I am okay to trade. That dimension is fundamentals, and that is for shorting the top. And L Brands is certainly very strong. Medium valuation but very high growth, earnings growth. Fundamentals were not weak, but I did take a short position earlier. That was using naked put options. I was watching the stock on Friday and I saw that relative performance was stronger than the market. Tried to go down but went up and closed with an indecisive shape candle. And fundamentals are not weak. I already had a reasonable profit with naked put options, so I in fact booked my profit in LB. If it closed with a bearish shape candle, I could continue to hold partial position, but it did not do that. In fact, if you looked at the fine tune 5 or 10 minute chart, created the early range, had a gap down open, but it didn't go below early range low, didn't stay inside early range also. Instead, it broke to the upside. I had naked put options in LB. I had a profit, and again naked options profit can erode very fast if the stock goes against me. So I decided to book my profit in LB for those reasons. And at market level, I already explained why I had reasons to book profit. I did the same in MT. Another high flyer, isn't it? Steel industry stock. Had bearish headwind in weekly, bearish headwind in daily. I took short position in MT earlier, and on Friday it closed right at the watermark support with indecisive shape candle, relative performance tilted up. Of course, the weekly is looking very bearish, but it stopped right at the watermark support, which had good support earlier. It's already far from recent swing high. And if you look at the intraday fine-tune chart, didn't actually drop much after creating a narrow early range, didn't drop much, just moved sideways, and at the close of the day very high bullish volume came in. Of course, that didn't move the price. That may be a result of many options expiring on Friday, but it didn't drop much while the market ETFs were dropping, and I already had good profit. So that's another stock where I booked profit. CCI, I shared this stock also earlier. I shorted it because it had bearish headwind in weekly, daily, again a high flyer. And you see these examples, I am confident to short high flyers right at the top using the analysis that I am doing confidently so long as my risk is narrow. And all these stocks I had narrow stop loss. I was anticipating this trend line support to be broken, but it did not get broken on Friday. In daily it was moving sideways. Friday's candle looks bearish, but it is still inside the range, and importantly the weekly support was not broken. I don't like to short near support. In this case I took a chance. It didn't break the support on Friday. I had a small profit. I closed this trade also. It was naked put options again. Weekly support was holding. I closed it. AIG, another short I took. Again I used the weekly bearish headwind, daily bearish headwind. Somewhere I don't remember. I wouldn't short it on a green candle, but I could have shorted here or maybe even on this day. I don't remember. It was naked put options. I had large profit. I think more than 100% profit by the time price came to the trend line support. It has very bearish shape candle in daily weekly, but it closed right on top of the weekly and daily trend line support. I had very nice profit, and I have learned to respect these trend lines or the watermarks, deep watermarks and trend lines. So I had good profit, naked options. I didn't want to take chance. I booked my profit in AIG also. On the other hand, one position I am still holding, partial position, that is CCJ. Again a stock that I shared earlier. Again a stock that was high flyer, displayed bearish headwind in weekly, daily, shorted near the top. In fact, I shared it right at this point when it was moving sideways, or maybe it was, I think it was still moving sideways. Then yes, I remember that. Next day, after I shorted, which was on this day, I shared it publicly on that day, dropped by 10% for the stock. I had more than 100% profit. When it reached the yellow direction line, I had booked partial profit at that time, got my investment money back. And as I would expect the stock to bounce from yellow direction line, it did, stopped at the cyan magenta lines, came down again. On Friday, it closed below the yellow direction line. The next support is some distance away. So here I did not want to book the remaining position profit. Naked put options, but I have good profit already. My money is back, and there is no reason for me to book the remaining position profit. So I'm holding on to partial bearish position using naked put options in the stock. My money is already back. And I also looked at some stocks that were showing strength while the market was sharply coming down. Lemonade was one such stock. Recent IPO. Weekly bullish shape, bullish color. Daily had a deep pullback, recovered very nicely. At this point, it went above both yellow and white direction lines. I would not like to buy at that point because the stop would be far away. I waited for it to pull back, go up from the yellow white direction lines, now in a confirmed uptrend, and I saw a bullish flow on Friday that gave us a go with flow long trade setup. I found it from Sonar. So if you drop Lemonade on Sonar, it showed me a go with flow long trade setup, and I took a long position in Lemonade just before the market close. I did share it on the forum also at the same time and Twitter. Market was looking very weak, but this stock on both Thursday and Friday went up and gave me a valid long trade setup. So I took a long position. It's a recent IPO, so I didn't check the fundamentals or the industry. Industry would have been weak because all the stocks were down. Most of the stocks were down. Industry would be very weak. Fundamentals, let's look at that. Recent IPOs, I wouldn't rely on fundamentals to buy it, but no harm looking at it. I looked at the business, looked interesting, yes, as I would expect. The fundamentals are not great, and that is fine. We may not buy IPOs based on fundamentals, based on their product, technology, marketing, and in this case, of course, the chart pattern. So I have a long position in Lemonade. It has defied the market downtrend, so I was okay to buy it. Even if the market comes down next week, continues to go down, I don't expect this to go down much. I expect it to hold the yellow white direction lines, and if that is not true, I will cut my loss and exit the position. Now we have some time left. We can do one of two things. We can do top-down analysis of the best 10 industries, or we could look at recent IPOs, best or maybe worst 10 industries. There is not much point looking at buy positions from best 10 industries. In fact, there are not 10 industries that went up on Friday. If you look at the industry percentage move from QH, sort by one day performance, only two industries were up on Friday. We have 147 industries in QH for USA market. Only two went up. One is laser facilities, went up by 0.76. One is data processing outsourced services, 0.33%. Home building almost unchanged, 0.08. Can ignore that. Only two industries went up. When the market is so bearish, there is not much value in looking at strong industries and trying to buy. Instead, we may look at stocks that are strong in some way, recent IPO, good technology, good product offering, and they are holding strong. Those are viable buying candidates in this kind of market. On the other hand, if we look at the worst performing industries, then we may look for shorts in them. I will look at the weakest industries, but before that, let's do an analysis of recent IPOs and see if there were other buying candidates on Friday. I think there were. So let's look at the IPOs. I created a list of recent IPOs. Recent is of course subjective. So here I gave a lot of time stocks that are IPO'd in last 5 years. That's a long time, but that's fine. It has 466 stocks. Let's do a fundamental scorecard analysis. I will try to find high growth stocks that went up on Friday. Scorecard calculation is complete. Let's look at the stocks. Look for extreme high growth stocks. In the last quarter, many are there, and these are the stocks that went up by at least 1%. Let's drop them in Sonar to see if there was any buy signal in them. FLGT, that's nice. As you know, I am holding a long position in FLGT. I think I was talking to one trader when price was probably here, and he was mentioning it is not going anywhere, but I already noticed multiple bullish headwinds. So based on that, I took a long position somewhere here, tried to go up, displayed an indecisive candle, indecision at the top, came back below the yellow direction line, but the trend line support held. Friday went up. If Friday's candle did not have the upper tail, I could add to the position. I'll keep an eye on this stock. You see, on Thursday, Friday, to a lesser extent than Lemonade, but this stock went up on Thursday, Friday both. In fact, Wednesday also it went up, gradually increasing, though not high volume on Wednesday, Thursday, gradually increasing volume Wednesday, Thursday, Friday. Friday has a thick bar, so high volume. Bullish flow also, but it has an upper tail. Otherwise, I could add to my position in FLGT. In fact, if I may elaborate, I took a long position here when it came to the upper boundary and displayed the indecision candle. I booked partial profit, and I was expecting the trend line support to hold and add to my position here. So I will see if it can go back up next week, and then I may add to my position again. FLGT, that is one stock, but that's not giving a buy setup as of Friday. Let's look at the other stocks. Let's look at the breakouts. One is Doku, one is Roku. Let's sort by breakout. Let's look at Doku first. Open, no, sorry, not open. From open, it went up by 5.1%, on a closing basis, up by 5.3%. Let's read all the signals. High bullish activity on Friday, breakout setup, also a possible go with flow trend following long setup, pocket pivot, the alternate signals, already at upper boundary. That is fine for a breakout setup. Upper boundary is not a concern for breakout setups. Pendulum high, that's fine. Breakout from pendulum high is also okay. In a confirmed uptrend, relative performance shows doing better than the market, very low implied volatility. Let's look at this stock. Up by 5.3% on a very down market day. It's very nice breakout. Of course, it's not my style to chase a breakout like that. I would prefer to start to buy looking at the bullish headwind, and maybe in the first bullish flow after the first bullish headwind signal. Now it is too extended for me, but it is certainly having a nice breakout on Friday. Too extended for my trading style. Let's look at next breakout, Roku. Let's look at the sonar signals again. Bullish activity, breakout, pocket pivot, breakout from a squeeze, Q breakout, not MOBO breakout. MOBO breakout you can see is not there. Q breakout, that is trend line breakout from a squeeze with Kahuna, confirmed uptrend, strong relative performance, volatility low. Even before opening the chart, I can see it is not at upper boundary, not at pendulum high. So this may be a stock I will be happy to buy. Unlike Doku. Doku was at a high price level, extended level. Could be bought, but not on Friday. Friday Doku didn't give a buy setup to my choice, but Roku is looking better. Weekly, very nice bullish shape, bullish color candle. The base was formed by multiple long lower tail candles. That time the candle color was magenta, turned to yellow, moved sideways for 3 weeks, and this week, while the market was down, it broke out nicely. Would I buy at Friday's close? No, because it stopped above the trendline resistance, but not much. I will see on Monday if it can break out to the upside using fine-tune chart, but to my liking would be on Thursday. If I carried out the same analysis on recent IPOs, this list, using Finder or using Sonar, I would have found Roku on Thursday. Let's look at its fundamentals. Roku, while it is retrieving data, okay, now you can see it's very fast. Valuation not so great, that's fine, has great earnings growth, short squeeze potential. And if I look at the Finder signals, remember Finder shows not only today's signal, that is a breakout, but yesterday's signals in green. Yesterday, that's Thursday, it gave a go with flow as well as a pullback setup. That would be my swing low buy. I am okay to buy breakouts also if they give low risk entry points, but in this case, I'm a regular trader. I use these easy to use systems. I would have found Roku on Thursday itself as a go with flow and pullback candidate, and I would have bought on that day itself, which I didn't. I didn't carry out this analysis on Thursday. I was happy with my profit, increasing profit in my short positions. Only on Friday, when I booked profit in many of my short positions, I was looking for new long trades. But Roku could be taken on Thursday itself. Let's look at the other few stocks. Let me delete these two. I have already looked at them. Let's look at the go with flow candidates like Lemonade. FLGT I already looked at, delete that. 10B, TENB. What are the signals? Bullish activity, go with flow setup, pocket pivot, MOBO breakout, but an indecision candle. So let's not look at that. Indecisive candle I'm not going to buy. Can delete that. VXX is not a stock, going to delete that. Let's look at the pullback setup. CHWY, GW, has a pullback setup, no other signal. Let's look at it. CHWY regained the yellow direction line. However, there is a trend line resistance nearby. I am not going to buy it right now. The weekly is looking bullish. After earnings, it created a bearish shape candle, but this week when the market was down, the stock went up. Bullish shape, bullish color in weekly. In fact, one could buy on this day, bullish flow candle. That was a low risk buy point with stop just below the trend line support, the white direction line support also. And then one could watch the stock to see if it is reversing from trend line resistance and book profit if that came true. If it can break out, one could continue to hold. So I would have bought using my trading style on Wednesday using the bullish flow and support from white direction line. Now it's looking strong. I may add it to my watch list and see if it can break out of the trend line resistance. These are strong stocks because they are going up, recent IPOs, while the market came down. Let's look at one last stock, CWH. It has a bullish reversal, touch trend line support, bounced up from trend line support, has a bullish headwind. green candle low. Failed extreme is green candle low at lower boundary. That is expected. Bullish headwinds come at a low price level. It is at the low boundary, may give a low price entry point. Downtrend, that's fine. Bullish headwinds come in a stock that is not in a confirmed uptrend. Relative strength is strong. Volatility, implied volatility low. Let's look at CWH. This is a stock I would be happy to buy on Friday. It has nice trend line support. In fact, it gave a bounce setup, isn't it, on Sonar? Yes, bounce setup, come headwind setup. Now, if we applied the checklist conditions, the headwind setup conditions are not being met because the weekly is not yellow or weekly shape is not bullish, but the bounce setup conditions are met. So I have a bounce long setup with some additional confirmation from a bullish headwind signal, not setup. Also a quite powerful signal, the reversal candle, in this case at trend line support. Also a green candle low in the alternate signals. And we can see it is at jump thrust near the extreme low. Jump is at extreme low, magenta. Thrust is not really extreme low, but nearing the extreme low. But jump thrust together is showing that a retracement is likely, and that is coinciding with a bounce setup, bullish headwind, bullish reversal, red candle high. So I would not mind taking a long position on CWH on Friday. I didn't take it, so I may watch it on Monday and see if it goes up. If the market goes up, the stocks may go up even faster. This is the same technique that I used to identify lemonade, LMND, and I took a position. Let me add CWH. I may keep an eye on CWH to see if there is a long position. Now, one thing to note, when I created this list of stocks, I looked at high earnings growth. You may run this analysis again on Monday and see if some of the IPOs start to go up on Monday, especially if the market is also trying to recover. Then some of these very high growth stocks in the last quarter may give low risk buy points, and you may identify them in real time using Sonar. You could use Finder also. That was a look at the recent IPOs. Not much time left. Let's look at some of the weakest industries stocks. So let's do a top-down analysis, but for bearish trades, and we may see several of the stocks are already down. Let's look at the weakest industries by percentage, or I could look at the scorecard also. Let's look at the scorecard. I like the scorecard. Look at the weakest industries. You may see that only 3 industries were up. We saw earlier 2 were up, one was practically unchanged. Most industries were down, but I am going to look at industries that were stronger earlier. So like this one, computer and electronics retail, it was stronger earlier. Let's look at this one, healthcare, facilities. Let's look at this one, consumer finance. This one was weak, tried to strengthen, went down again, but utilities, I'll not look at utilities, those are defensive industries. Let's look at this human resources. So these 4. So QH allows me to drill down into multiple industries at the same time. Let me do that. And before I don't want to drill down into S&P 1500. Now I can drill down into the entire list of S&P 1500 and mid and high price stocks. So let me create a scorecard for that first, so that I can look at the entire possible trading universe. While it is calculating the scorecard, I see there is a question: is the IPO list in Vital? Those lists I create sometimes, I will post it on Twitter, because that list keeps on changing. And as you saw, Mike had a question on the list. I used stocks that were IPO'd in last 5 years. That may be too long a period. That list can be created in many ways. I will post that list I used in Twitter after this session. Okay, scorecard is calculated, and this is my entire trading universe. I will not like to trade beyond this list. So when I go back to QH, where is QH? I have highlighted the industries of my interest. I'm going to drill down to all the stocks in Q Vital. These are the stocks. Let's look at least one star bearish stocks, and not many, right? One star, only this few. And let me highlight the stocks that went down by, let's say, more than 1%, and I look up their trade signals from Finder. I see one breakout, GME. Well, I never bought GME when some others were buying. Let's look at GME. Very volatile stock. In fact, it has a nice breakout setup on Friday. So it is possible to short GME with a stop above the recent high, or if it closes above the trend line support again. Weekly is also bearish in color. It has a MOBO breakout as well in the alternate signal. But GME kind of stock is not my favorite stock to trade, too speculative. So let's avoid that. At least I will avoid that. That was the GME breakout, only one breakout. Let me remove that. For go with flow, I have two stocks, Fast Cash and Upwork. Let's look at them. FCFS. In fact, I may just open them on Q Global easier. Sorry. Fast Cash. No, I have to be on charts. Okay, do one more time. Okay, it has a bearish flow, bearish headwind prior to that. Let's look at it using the 3 chart template now. In fact, this is one of those stocks which I would not mind shorting at the top using the bearish headwind, because it made the bearish headwind setup conditions. Not only the signal came on Wednesday, the weekly was already yellow 1 week ago. So the weekly was also meeting the conditions. I could short it on Wednesday itself. Now it is a bit late to short for me. I would have taken a bearish headwind short setup on Wednesday. So let's look at one last stock that gave a bearish flow on Friday, Upwork UPWK. Has a bearish flow, but weekly is not meeting the trading conditions for a short trade, so I will not short it. On the other hand, stocks like, let's say, LPX, they are already down a lot. Remember, I highlighted the bearish headwinds earlier. They are already down a lot. They are not in a low risk short position. If we look at IBM even, it has come down from the upper boundary after displaying indecision at the top, bear release, false breakout to the upside at the watermark resistance. It has already come down a lot. Many of the stocks you will find they have come down from the recent swing high. Yes, it is looking bearish on Friday, looking bearish for the week, even has a bearish headwind, but it is not easy to decide a stop position for these stocks. So I may keep an eye on the stocks next week and see where it is going, where the market is going. If it goes up, I'm happy to, in fact, buy some of the strong IPOs. Even if the industries are not strong, I'll be able to buy them just like lemonade. Past 1 hour point. Let's end today's session here. Once again, you may see from the public sharing before knowing the result that using Q systems, I can and therefore you can. Probably better than I can. You are in the USA time zone, most of us, to be a little bit ahead of others, and that matters a lot in short-term trading. My account was holding steady at about 30% since about middle of March, end of March, until the time I started taking short trades at the top. My account was not going up, not going down, and now I booked profit in many of my short positions. By the way, my healthcare stocks are doing all right. I mentioned earlier I was accumulating some very strong fundamental healthcare stocks like F, like Fulgent, FLGT. They are doing pretty well. They didn't come down much. If at all, some of them went up on Wednesday, Thursday, Friday. So they are doing well. I bought a long stock on Friday. Overall, my account is now up by 40%. The account that I use sometimes to train traders, the TestyWorks account. So it went up from 30 to 40%. I hope to reach at least 50% by the year end. Let's say, maybe more. Thanks once again for joining. I look forward to seeing you again in my next session, which will most likely be on Wednesday, 8 a.m. Eastern Standard Time. I'll announce the link and the time on my Twitter page, and if you are subscribing to YouTube channel, you will get notification from there as well. Thanks once again. Keep safe and trade profitably.